Let's take a deep dive into some of the biggest trends right now in tech. Bain and Company out with its annual sector report. Some key highlights include a crowded buyer's market ahead for tech assets, IT budgets remaining strong despite a focus on cost discipline. And when it comes to AI, a lot of industries and jobs are ripe for automation. Joining us now for a closer look, David Crawford, Bain's global head of technology. David, I just wanted to start with some of the macro takeaways here because you did look into IT budgets. And when we go into recession, that is one place we typically see companies cut. What are you seeing right now?
Yeah, we've seen several years of CIOs reflecting, cuts in budgets, necessary pullbacks, et cetera, though less so than historic downturns because tech has just become so essential to the way we operate businesses. But we're seeing in 2023 CIO sentiment turning much more positive and anticipating increases in IT budgets this year.
Because of AI?
It's a number of things. I think there's some tech debt that's accumulated just simply through austerity measures over the last 18 months. But yes, certainly AI is a huge driver of demand at this point.
David, we keep talking about use cases and more than that, monetization of use cases. People still argue it's early. Wait till next year. Some people point to Q1 to when the number of cases really inflects. Does that seem ambitious to you?
I actually think, there's a lot of technologies where we might advise a wait and see or a posture of wait till maturity. This isn't one of them. We actually see generative AI as uniquely disruptive, uniquely capable of driving innovation. And the only thing we see holding back use case application has really just been the time it takes to redesign your business processes to make use of these new technologies. So I think you're already seeing across our client base enormous amounts of application of this new capability. And it has been, think about the last time that you were given a tool that would allow you to sort of improve business productivity by 8 to 20%. And so it is already, and it will become more visible in terms of its disruption.
So for those macro bulls who are, obviously, it's always been hard to call productivity cycles, but for those who argue it is going to provide support to markets and global economies over the next, say, 3 to 5 years, you don't think that's misplaced?
Not at all. In fact, I think we'll have a roadmap of innovation that will likely last a decade.
How should investors get in on it besides buying NVIDIA stock?
Yeah, it's always safe to buy the picks and axes. It's a great spot. I think there's a broad range of places. I think it will, first and foremost, drive the efficiency of the overall incumbents in every industry. I do think there's a number of really attractive startups as well. And if you just follow the most prevalent use cases of code development, acceleration, things like knowledge assistance for customer handling and other applications, I think you will find yourself with plenty of investment opportunities.
People argue that proponents of AI and the evolution of the technology want to downplay the effects on employment. And by that, I mean the jobs that are going to get lost. Do you think there's a way to get more realistic about the number of people who might be displaced?
There's no shortage of analysts who have published impact assessments and headcount numbers. We will see that transition. Historically, technology trends have created many new opportunities as well, and we're seeing that as well. So reskilling, redeployment, and so forth will be pretty important, I think, in this wave. But absolutely, it's going to be a significant disruption to day-to-day workers.